తీసుకెళ్తా. పెద్ద షుగర్ ఉందా? ఇప్పుడు క్యాండ్ కదా, చిన్న దాంట్లో అయిపోయింది అది.
Hello, good evening, everybody. The audio video is fine.
It's fine, sir.
Okay, good. Okay. Hello, whether the screen is visible? Can you confirm me?
Yes, sir. Visible. Audio and video is visible.
Very good, very good, very good. Sure. Shall we begin now? Because I think we are already on dot and we shall begin. Okay, and we are starting very simple part, and most of you are well aware about that, and therefore, wherever you feel that we are going too basic, but since it is a part of our syllabus, I can't avoid it. Therefore, if you say that this too basic we are going, then we'll just move very quickly. You know, for example, see, whenever we talk about the retail banking products includes the deposit, that is liability products, as well as the asset products and service products, isn't it? As far as deposit concern, in the deposit, there are two types of deposit. One is a demand deposit, second one is a term deposit. Demand deposits are those deposits which are repayable on demand, means where there is a facility provided to the customer to withdraw such deposits as and when he needs. By multiple ways, the facility is getting provided to those customers. So that is by check, by withdrawal, by ATM, okay, by transfer. In multiple modes, they can do that money withdrawal. Whereas in term deposits, the money is repayable only after completion of that particular period, or in case the person wants it bit early, even premature closure also is permitted, but for that purpose, he can't use the check. And therefore, those deposits are called the time deposits or term deposit rather than demand deposit. Okay, one should not get confused that term deposits are not repayable. Please understand, even term deposits can also be repayable before completion of the maturity period. Okay, that's the pre-maturity period also. The term deposits can be paid. Okay, that facility is provided by the bankers. Okay, now second comes is out of the demand deposits. The demand deposit comprises of current account and savings bank account. And as all of you know, the current account, actually we don't pay any interest at all, whereas operating cost is comparatively higher. Whereas in case of savings bank account, we pay a small amount of interest or lower interest. And here in SB also, reasonably, the number of transactions are more. Okay, so as such, with regard to the SB and current account, there is a lower cost on account of interest, whereas a medium or a bit higher cost on account of the transactions. Okay, whereas on term deposits count, the interest cost is high, whereas transaction cost is low. Okay, transaction cost is low. So therefore, bank wants more of CASA. Why bank wants more of CASA? The reason behind is the bank can maneuver while framing the rate of interest policy on loans and advances. That is the reason. Okay. Now, as yesterday we were talking, once again we will talk about that. Please make a note, current account as such, it is eligible to be opened by anyone for any bona fide purpose. Okay, the person, whenever we say anyone, means an individual, a joint individual, a proprietary firm, a partnership firm, a company, a trust, an association, any one of such legal entity, as well as registered entity, unregistered entity, can open a current account. But the only one very typical restriction is, in case the customer who is approaching us for opening a bank account If he is having a limit more than 5 crore, then we may say no to such person for opening an account unless and until the concerned bank allows us. The bank which has granted the 5 crore loan, they allow us, then only we may be opening, otherwise we will not. Whereas for less than 5 crore, we can open, but at the same time, we will definitely keep the concerned bank informed about that they are having the account with us. Okay. So now, number 3, very important part is, see, a party can open a collection account. Whether they have more than 5 crore or less than 5 crore loan from somebody, but if they are having the branches, agencies at such a places where that particular bank which has given them loan is not available, in that case, to collect the money, the particular company, particular firm may open a current account for the purpose of mere collecting activity, collection activity, and that collection account, when it is opened, so all the balances, whatever accrue in that account, that need to be remitted within 2 days. Means 2 days, not more than 2 days, the balances can be retained by the bank. Within the 2 days, need to be returned. Okay. This part yesterday we have already discussed. Yeah, Mr. Syed, am I audible to all other? Hello? Am I audible to everyone? Can I get a confirmation? Okay, Mr. Syed Hafizuddin is unable to listen. So I think he may have to correct at himself. Okay, please contact the IBS person. They will guide you how to get yourself once again your system connected to audio. Okay, now the importance with regard to retail banking is, whenever we open any account, current account or SB account or any type of the operational account, for a period of 6 months, we have to closely monitor the transactions. Why we need to monitor closely? Because we do not want the bank account to be used by the people for money laundering activity. So as an anti-money laundering measure, it is a directive by Reserve Bank of India to monitor the transactions in all the accounts, in a new accounts, for a period of. I can't listen what is being delivered. Can you please fix this? Yes, Mr. Hafiz, I think I have to message you. Please log in. Okay. Log in. That is what only I can tell him. Yeah. Now, as far as savings bank account concerned, please note, saving bank account is basically for non-business activities, not for the business activity. Okay, that is the number 1 fundamental principle. Number 2, who can open the saving bank account? An individual, a joint individual. In addition to this, even SHG can open a saving bank account. Okay, SHGs are permitted to open a saving bank account. In addition to this, certain government departments and some non-governmental organizations or non-profit organizations, they are also allowed to open saving bank account. Okay. Now, second important aspect with regard to saving bank account is, can a minor open? Yes, minor also can open a saving bank account. Who is a minor? Minor is a person who has not completed 18 years of age. Okay. According to Indian Contract Act, okay, a minor is not capable to enter into a contract. And every contract entered with the minor is right from beginning null and void. And as such, actually, we should not have entered a contract with minor. But Reserve Bank of India says, in order to inculcate the habit of savings, let's allow the minor who are learned, that is educated, who knows what is written and what he can read, write, and understand. He is of 10 years of more age. Then in his own operable account can be opened. Whereas for all other minors, account, if at all opened, that is operated on behalf of that minor, the guardian. Okay, means money belongs to the minor and operated by the guardian. Okay, So this is what is another aspect. Number 3, whenever we open an account, whether current account or the saving bank account, PAN is must. PAN is must. When we open a minor's account, then PAN of the guardian taken. In case minor has got some taxable income, then minor's PAN. In case minor has got a PAN. Okay. Then number 3, in case the person do not have PAN, then we necessarily obtain the Form 60. Form 60 is nothing but mere declaration from the party, from the concerned person, that he doesn't have PAN with him. His income is not taxable. He is not filing returns, income tax returns. As such, he doesn't have a PAN, and that declaration is Form 60. Okay. Now, why this Form 60 and other things? The other documents which we obtain from the customer regarding identity as well as the address proof, they are a part of KYC policy. What is the KYC policy? KYC policy is a policy as per the directives of Reserve Bank of India, and the Reserve Bank of India gave the directions with regard to KYC policy, because Reserve Bank of India is directed by FIU. What is FIU? Financial Intelligence Unit. And this Financial Intelligence Unit directs the Reserve Bank of India that all its regulated entities, okay, all financial entities, they must ensure that whosoever is dealing in financial transaction, their account must have the KYC compliance. Okay, why KYC compliance? Because the Section 35A of Banking Regulation Act, the RBI gave directions, and those directions are mandatory for banks to implement. And under that direction, Reserve Bank of India include not only KYC, but also anti-money laundering guideline, and also combating financing terrorism guidelines. So these 3 guidelines put together, commonly understood as KYC guidelines. KYC guidelines. And those people who wanted to know further on KYC, my request to them is they can visit my video on IBS channel on KYC. Listen once. Within 10-15 minutes, you will understand the entire gamut of KYC. No doubt, now I am explaining you one by one in a very crispy manner. Okay, the KYC AML guideline, the AML guidelines are KYC guidelines are coming as a matter of RBI directions. Then these RBI directions includes the anti-money laundering guidelines. Anti-money guidelines are coming to RBI through Prevention of Money Laundering Act. And as per the Prevention of Money Laundering Act, every regulated entity is need to comply certain things. And those certain things are maintenance of records. Those certain things are reporting of transaction. Those certain things are monitoring the account with regard to risk. So these are the activities a part of AML. Whereas these are the activities relating to KYC, and these are the activities relating to CFT. Okay, now one by one, let us understand. So as far as KYC basically aims at preventing money laundering. What is money laundering? Money laundering is an activity adopted by the people to make illegal money to appear as if a legal money. Okay, so making it appear as a legal money which otherwise not a legal money, that process is known as money laundering. Money laundering has got 3 steps. One is a placement, second one is a layering, and third one is integration. Placement, layering, integration. These are the 3 stages of money laundering. Okay. Number 2, you may have to remember is that to prevent money laundering, the guidelines are. And those guidelines are included in KYC guidelines. Okay, that is number 2. With regard to KYC guidelines. KYC guidelines are as per the directions of Reserve Bank of India. Reserve Bank of India gives direction under Section 35A of Banking Regulation Act. Number three. Okay. KYC comprises of 4 important pillars. 4 pillars of KYC are, here they are stated. Customer acceptance policy. Customer acceptance policy. Second thing, customer identification procedure. Number 3, transaction monitoring. Number 4, risk management. These are the 4 pillars of KYC. Now, under each one of the pillars, there are further details. Under customer acceptance policy, one thing is sure, that bank should not open an account of anybody where bank is not in a position to comply with due diligence guideline. What is mean by due diligence? Due diligence means the information provided by the customer in his account opening form, we are supposed to verify. And if such a verification is not possible, okay, or no supportive documents are provided, or the customer is not providing the adequate information, as a result, we may deny an account. Okay. Second thing, with regard to customer acceptance policy, there is another guideline which is from the CFT, and that guideline is that we are not supposed to open an account of anybody who is belonging to a banned organization, an organization declared as a terrorist organization. Such entities account we should not open. And this list of such entities is being given to Reserve Bank of India by FIU. FIU receives these lists from FATF and United Nations Security Council. Okay, so that is a background. Number 3, customer identification procedure. All of you are aware about that every customer need to be identified on the basis of OVD. What are all the OVDs? OVDs are 6. Number 1 OVD is, let us say, passport. Number 2 is driving license. Number 3 is Aadhaar. Number 4 is voter ID. Number 5 is Manarega card. Okay. Number 5 is Manarega card. Number 6 is National Population Registry. Aadhaar number, driving license, voter ID, then passport, Manarega card, and the NPR. These are the 6 OVDs, officially valid documents as per KYC guideline. And see, in addition to this, PAN, a document which is compulsory. Okay, PAN is a compulsory document. PAN is not an OVD for identity. Okay, in case a person doesn't have a PAN, then we are obtaining Form 60. Okay, Form 60. And after obtainance, there is a verification. And that simple verification, when we do with the help of original check, is known as simplified due diligence. What is that? Simplified due diligence. Okay, due diligence. Whereas, in addition to this, if a partnership firm, if a company, if a proprietary firm, they are coming and approaching us for opening a current account, then we are discussing with him what would be the turnover, what kind of activity, what kind of transactions will happen in the account. And to verify that, we need to go personally, visit the location, verify the address, check up all the things relating to business. That kind of thing, when we do, it is called as enhanced due diligence, EDD. Okay. Now, this is regarding your customer identification procedure. Now, this customer identification procedure can be done through Aadhaar. This can be done through video CIP. Okay, video-based customer identification, or it can be done also through the CKYCR. What is CKYC? Or it can also be done through people appointed for the purpose, third party people, agents. So these are multiple way verification can be done. Okay, but please make a note, anything goes wrong with regard to verification and a wrong person account is getting opened, then bank is penalized. Penalty is levied by Reserve Bank of India very heavily. Okay, what is CKYCR? It is Central KYC Registry. And what is the Central KYC Record Registry? It is a registry where all the identity related documents about the customer, okay, address related document about the customer, they are loaded by a bank or entity as and when account get opened, and as and when they are modified, that modification also gets recorded. And once the record gets created, customer gets a 14-digit ID. And now once a record is created on CKYCR, customer need not have to give any further document in any financial institution for opening an account for financial transactions. Okay. And this CKYCR at present managed by CERSAI. Who manages it? CERSAI. CERSAI is an organization established under SARFAESI Act. Okay. Now, next is the video-based CIP, video-based customer identification procedure. Here, customer with the help of a camera in his phone, through the video, he can confirm his PAN number by showing it, confirm his Aadhaar card by showing it, and telling about his name and his identity, his address, and that video gets recorded. And with the help of that video, bank opens a account remotely also, and that is considered as good as customer is in touch with. Okay, geopolitical location means the person, he has to invariably talk from the address only. Okay, then automatically that geo tagging is done, that this video is coming from this location. Okay, that's the way it gets confirmed. Then third is Aadhaar enabled KYC. It is done with the help of Aadhaar, UIDAI. Okay, and an OTP will come to the customer, and the customer has to tell the OTP, confirmation happens. And mostly business correspondents, when they use this process for account opening, then there are few restrictions with regard to turnover, restriction with regard to transaction, restrictions with regard to balance in the account. Similarly, there are many people in a country who do not have an OVD at all. They do not have any one of the OVD, whatever we are telling. Now, are we going to deny the account for them? No. We have to open an account in the name of small account. And the small accounts are those accounts which are opened on the basis of mere declaration along with the photographs duly attested by the branch manager, and then account gets opened. Such accounts are opened for a period of 1 year. Such accounts are opened for a period of 1 year. And within that 1 year, person need to go and get an OVD, and automatically account becomes a regular one. In case due to any reason customer is unable to get the OVD in his hand, then another 1 year extension will be given by the bank on the basis of customer submitting a proof that he has applied for OVD. Okay, that is the, and here also there are restrictions in the account. What restrictions? Maximum balance in this account can be 50,000. Maximum turnover in this account can be 1 lakh. Every month, not more than 10,000 rupees withdrawal. That is what, these are the 3 restrictions with regard to small account. And what are all the restrictions with regard to remote opened Aadhaar enabled KYC account? There, the turnover is 2 lakhs and balance can be 1 lakh. And here in these accounts, as the BC is involved, the loan also sometimes sanctioned by the bank, that is 60,000 term loan can be sanctioned. These are the things relating to the KYC. Okay, now the last part, that is a risk related aspect. Based on the kind of activity the customer is undertaking, based on the source of money in the account, okay, and the turnover in the account, the accounts are classified as high risk, medium risk, low risk. Okay, and based on the risk classification, we are expecting customer to do re-KYC, means repeat KYC. Once again, fresh KYC for small, low risk account, once in a 10 years, for a medium risk account, once in a 8 years, for a high risk account, once in a 2 years. This is what with regard to the re-KYC. RE-KYC, re-KYC. Next is the transaction monitoring. As I already told you, 6 months transaction need to be monitored. Now, maintenance of record. Please make a note, those transactions which we are reporting to FIU, whatever transactions are reported to FIU, those details relating to that transaction need to be maintained by the bank for a period of 5 years from the date of transaction. 5 years from the date of transaction. Whereas there are identity related documents, ID document, account opening form. These are required to be maintained by the bank for a period of 5 years from the date of closure of the account. Closure of the account. These are the few guidelines relating to KYC. Anybody, any question, you are most welcome. In one go, I have told entire KYC. Any questions, please?
సార్ ఇందాక చెప్పింది ఒక్కసారి రిపీట్ చేయరా 5 years ఎప్పటి నుంచి ఎప్పుడు సార్?
Very okay. See any account wherever see these are the transaction reporting. Amari, I have not covered this reported transaction, isn't it? So this reporting of transaction is a part. Now whichever transactions we are reporting to FIU, we need to keep that record with us for a period of 5 years from the date of transaction. From the date of transaction. Clear? Number 2, the customer's ID documents are with us. Customer's account opening form with us. Am I right? Now these documents are required to be maintained for how long? These documents are required to be maintained for a period of 5 years from the date of closure of the account. Means during the account running, we have to maintain compulsorily. Even after closure of the account, we have to maintain them for a period of 5 years. Clear?
Thank you, sir.
Any doubt, any question, any other question? Okay, now same thing. Okay, now next part I'll be covering in a very quick mode this part relating to reporting of transactions. Now which transactions we report? First we report the cash transaction report. Second we report is a suspicious transaction report. Third report is a counterfeit currency transaction report. Okay, fourth report is non-profit entity transaction report. Non-profit entity transaction report. And fifth report is cross-border wire transfer report. Clear? So 5 reports. Now, what is CTR? CTR is a cash transaction. CCTR is a counterfeit currency transaction. NPTR, non-profit entity transaction. CBWTR is a cross-border wire transfer. Now these 1, 2, 3, and 4. These are monthly reports. How they are? Monthly reports. Once in a month, and every month by 15th of the next month. By 15th of the next month, we have to report. Second important thing within that is that CCTR, even there is a nil, we have to send the nil. Is it clear? CCTR, even there is a nil transaction, we have to send that there is a nil transaction, but we have to invariably submit it. Whereas other transactions, whether we want, whether we don't want, CTR will be always there. Okay, bank level, non-profit entity will be always there. Bank level, cross-border wire transfer definitely will be there. So this is what is one thing. Yeah. Validity masked Aadhaar. Yeah.
Sir, NPTR full form?
Non-profit entity transaction report. Okay.
Non-profit entity.
Non-profit entity means there are many charitable organizations. Am I right? Social work doing organizations. Okay. Now these organizations, they are called as non-profit entity. Means they are having the entity, but they are not into the business to make the profit. They are in the business of helping the society. And for helping the society, what do? They collect the donations. Am I right? And that donation, when it comes to their account, the donation sometimes it may be huge also, high amount also. And in case the high amount transaction happens, that we need to report. Okay. Is it clear?
Yes, sir. Yes, sir. Now clear, sir. Very clear.
Now, the CTR is for all cash transactions. All cash transactions. Amount exceeding
10
more
lakhs.
than 10 lakhs. Please, not 10 lakhs. More than 10 lakhs. Okay. More than 10 lakhs. Now, more than 10 lakhs, how? Not only one transaction, a series of transactions in the account or the connected accounts put together in a month. If the cash transaction happens for more than 10 lakh, that transaction gets reported. Is it clear? Now, second thing is the CCTR. CCTR is for fake currency transactions. Even one currency note comes or 10 currency notes comes or 100 currency notes comes, this report need to be filed with FIU as well as RBI every month. Okay. Number three is a irrespective amount. Even if it is 100 rupee, that is 250 rupees fake notes are received, you have to report. Is it clear? Number three is a non-profit entity. In non-profit entity, receipt of more than 10 lakhs. What is that? Receipt of more than 10 lakh. Please make a note. Receipt of more than 10 lakh. Not all transactions, okay? Only receipt in that account. Now this receipt not necessarily cash. This can be transfer also. Either way, it received in the non-profit entity account need to be reported. Is it clear? Is it clear?
Yes, sir.
Now, next is cross-border wire transfer report. Cross-border means from our country, money going abroad, or from other country, money coming into our country. Okay. This transaction means foreign country resident are maintaining account. We are maintaining account. From our account, money going out. From foreign country, money coming into any one of the account where amount involved is 5 lakh equivalent or more. Means more than 5 lakh equivalent money is coming in the account. Then the transaction required to be reported. Is it clear? Is it clear? Whether money comes, money goes. If the value is more than 5 lakhs, then that transaction is required to be reported. So this is what is the transaction reporting. And STR is all about the suspicious transaction report. Now, what is suspicious? The customer profile is with us, and as per the customer profile, he is a student. Now, in the student account, do we expect a 5 lakh, 10 lakh, 15 lakh account amount coming by check or by cash or by any way? Are we expected? No. Am I right? And when we don't expect such a money to come in the student account, whereas it is coming, then automatically system identifies it as a suspicious. And then further verification confirms that there is some illegal money is coming into the account, then definitely the transaction need to be required to be reported. Is it clear? And that suspicious transaction report need to be filed within 7 days from the transaction determined as suspicious. Means once the bank considers the transaction suspicious, then only within 7 days we require to report. Is it clear? Yeah,
Yes, sir.
good. Fantastic. See, masked Aadhaar in banking industry. See, please identify and understand, masked or unmasked. UIDAI confirms the identity of the concerned person on the basis of thumb impression. Am I right? Masked is nothing but your 8 digits are masked, last 4 digits are open, whereas customer tells us, but that details do not display all the 12 digits. That is the only known as masked, and it is a valid one because ultimately who confirms that identity? It is the UIDAI confirms. Okay, and that is confirmed through the mobile identification. That is a concerned customer's registered mobile number, OTP gets received and we get identity confirmed. Clear? Now next very important part is shell bank. What is shell bank? Shell bank is a bank, or shell company is a company which is registered in a country and operating in another country. Okay, registered in a country and operating in another country, and in where it is operating, where it has got least control over operations. Means very few controls are there, very few compliances are there, and such a company, such a bank is known as shell company, shell bank. And anti-money laundering CFT guideline says that we as a banker, we should not enter into any correspondent arrangement with such a shell bank, which is not subjected to any regulatory compliances. Clear? So this is all. Okay, I think all these
Sir, that
aspects.
point, please once more, sir. Shell
Which
banking.
one?
Shell banking.
See, shell bank is nothing but a bank. Okay, a bank opened, let us say bank registered in Malaysia. Where it is registered? In Malaysia. Okay, now it is operating where? It is operating in Syria. Is it clear? Can a bank work like this? Definitely work. Whether the Standard Chartered Bank, where it is registered somewhere. It has taken license from Indian Reserve Bank of India and operating in India. Correct, no? But Reserve Bank of India makes that bank compulsory to report certain compliances. Whereas in Syria, there are least compliances. Now, this bank is coming to Union Bank of India to make a correspondent banking arrangement for meeting the customer's requirement of their bank. Then what is the guideline says? Guideline says no more any banking arrangement with such a bank. Is it clear? Is it
Sir,
clear?
yes, sir. Yes, sir.
Good.
Yes, sir.
So these are all the further details, I think not required. Okay. Now let us jump on something else, provided you do not have any questions. And I request all of you sincerely, it is not for the sake of IBS video or my video. That is a very good video, 10-minute video. Please visit. It will clarify most of your doubts. Okay. Most of your doubts regarding KYC ML, which is a 15-minute video. You can clearly understand all the things. Okay. Now, next is the very important thing called as product development process. See, any product for that matter, whether it is a deposit product, whether it is a loan product, whether it is a service product. Why do we develop? Tell me why a bank develops the product. Bank develops the product because we want to meet the requirement of the client. The need of the customer need to be addressed. In order to address the need of the customer so that that need is satisfied and we get some money, we get some profit, and the customer gets happiness. For that purpose only, we develop a product and offer that product to client or offer that product to customer. I hope you all understand this. Am I fine? Okay, with this point is clear, no? Now, when we do so, is it that every product, whatever we develop or whatever we come out, is it applicable to all the people in the country or all the people in the area or all the people in the world? It is not so. So products are specific to segment of the population. Okay. And this segment can be decided on multiple count. Number one, very commonly called as a demography. Number two is a geography. Number three is a psychography. Number four is a behavior. Now, what is mean by demography? Demography is nothing but categorizing people on the basis of age, on the basis of gender, on the basis of their income level, on the basis of their marital status, on the basis of their ethnic background. Okay, this is known as demographic segmentation.
Sir, ethnic
Geog-
background means ethnic background.
What is that?
Ethnic background means that expression-
Ethnic. See, for example, for ethnic is nothing but our cultural, religious background. Okay. According to that, our tastes differ. Do you agree with this or not? Is it that equal? All kind of people, they have the similar kind of taste with regard to enjoying a products. See, some people who are who have some religious taste, they say no, this kind of account or this kind of product or this kind of thing is not good. Some people say no problem, it works. It all depends upon the kind of culture what we develop. Okay, that is what is known as ethnic background. Okay, next is geography. Geography is very simple, whether it is a local, whether it is a regional, whether it is a national, whether it is international. Okay, depending upon the location. Okay, location based. This product suitable for South India. This product suitable for North India. This product suitable in Bombay. This product suitable only in northeastern part, like that. Okay, so that's the way when somebody thinks and brings the product, then it is a geographic. Then third thing is a psychography. Depending upon the kind of activities the person involved or the business entity involved, the attitude of the people, behavior, personality of the people. So that part. Okay. Then when it under the behavioral, it is the benefit. Some people look for benefit. Some people look for pattern. Some people look for the use. What best way I can use it. And is it really useful for my activity? Like that. And every organization, whether it is a bank, whether it is a toothpaste company, whether it is a soap making company, whether it is a refrigerator making company, whether it is any company for that matter, that company, that product manufacturer, that service manufacturer need to look into this market segmentation, and according to the tastes of a particular markets, then that only product they have to target. In order to target in the right way, they have to understand first, this product is suitable for whom? This product is suitable for whom? Isn't it? For example, if I am coming to your branch and I'm bringing you my 40 lakhs which I have received at the time of retirement, are you going to offer me a product of deposit reinvestment scheme where interest is accumulated on the deposit? Are you going to offer me that product? Tell me, which product will you offer me? You will be offering me the interest product. Am I right? Why? Because you know I am a senior citizen. I am least bothered about within 7 years or within 10 years money gets doubled or not, doesn't double. I want immediate interest encashment so that my month can go very smoothly, isn't it? So means what? That monthly interest scheme, that deposit product is suitable for me on the basis of my age. So I am regarded as senior citizen. I hope point is clear. Okay. Now, similarly, the retail segment, as you know, it is a multi-channel segment, and it's a online usage scenario now. And most importantly, we are not even ready to leave the traditional part also. Means we are still continuing the traditional products. We are also thinking about the multi-channel, And we are also thinking that why can't we be online? That is the very interesting phenomena. And any bank, any organization, whatever I am talking, please don't think only in terms of bank. In terms of any product, you think, any product. Every product, when it brought to the market, when it is developed and brought to the market, the product runs through its genuine life cycle. And that life cycle is when I am introducing a product, naturally that time people do not know the feature and utility of the product. Very less usage means very less people will buy it. As a result, even I may not be able to cover my production cost, cover my administration cost. Still, I may have to continue so that I can enter into growth stage. And once I am entered into growth stage, then I am moving like this. But after a particular period, what happens? Competitors watch me, competitors observe me. And because of that observance, they also are trying to compete with me. Since my product is qualitative, I may maintain my client base constant. I am at the maturity level. But if I don't change now suiting requirement of the people, definitely if the other banks are bringing out something else, I am not modifying my product, then I am bound to be on decline mode. So this is what is a general tendency of any product, and as such it is called as product life cycle, which are all the stages: introduction, growth, maturity, decline. Point clear? Point clear? Now think of any product now. That is the reason people, unless and until some modification they do, some change they do, people, that is a common people have got a mindset, and that mindset works like this. Okay. So this is what I have detailed told you. The same detail is here in the slide. Okay. So at the initial introduction stage, sales are low. Growth stage, sales are up, and product is likely to break even and start making profit. Maturity stage, now stable sales volume is picking, our other business also picking. So according to our organization level, it works. Whereas decline, after that stagnation, product is bound to be on decline mode. Okay. So it is not standard for all the products. Some products such as the Colgate, now they are continued even after 50 years. Lux, that is continued after 50 years. But all of you know, Colgate and Lux continue to keep the brand live in the minds of the people by Colgate salt, Colgate charcoal, Colgate calcium, Colgate something like that. Continuously they harp on the brand image and they keep that product in our mind. Similarly, we also need to think about the retail banking products. Which are all the retail banking products? There are saving with regard to deposit products, saving bank, recurring, current account, fixed deposit. With regard to loan, home loan, auto loan, personal loan, credit card. With regard to cash management, that is ATM card. Okay, then online banking, mobile banking, payment, UPI, RTGS, NEFT, multiple things. Okay, I hope clear. Now we have understood only deposit part. Now we have to move it to loans part to understand the other part of the retail lending activity or retail banking activity. Okay, now you can see here, this slide is further making you clear about, with regard to deposit, these are the products. With regard to loans, these are the only few, not all. And then with regard to third party, insurance, gold coin, mobile recharge, mutual fund, government bond, DMAT, okay, advisory, referrals, and then collection of taxes and utility bill. All these we are offering. Why we are offering these things? Because we know that our balances are only used for these activities. Then why should not we only offer and earn some money? Because every business what we do, we earn some commission. Then why our account to be used and business to be earned by someone else? So let us bank only to allow this business to be carried out. With that idea only we are offering. I hope point is clear now. Hello? Shall I move further? Are we going speedily again? Okay, some of you were telling me yesterday we were going very speedy. I think today I have controlled myself and I was trying to go with a moderate speed rather than slow, rather than high speed. Is it okay?
Sir, this is okay.
Oh, fantastic. No, yesterday someone was telling me, I think that madam, I forgot her name. Okay, I forgot her name. Okay. But in case you, any point of time, you feel no, ultimately, as I told you, my objective is not finishing the syllabus. My objective is to make you to understand the gamut of retail banking so that you can comfortably answer the questions. Okay. Now, KYC policy, I have already told. Okay. You can see here. What is CKYCR? As I told you, it is managed by SERSI. Rule 9(1)(a) of Prevention of Money Laundering Act, that every regulating entity should capture the customer KYC record within 3 days of commencement of account-based relationship, and they have to upload it. Once it gets uploaded, a 14-digit code is getting generated, and that is a KYC identifier. And once KYC identifier is generated, person need not have to give any sort of documents to any financial requirement. Mere 14-digit code will be sufficient. The other entity, other organization can visit the CKYCR and retrieve the KYC details of the customer. Okay. Then eKYC process we have discussed already. Mostly eKYC process, Aadhaar based KYC, if it happens in the absence of the customer, means if it is happening through business correspondent, then only there are restrictions. But if the customer is coming to branch and branch manager is seeing only for the purpose of identification of those things, we are using the Aadhaar, then in that case, no restrictions are there in the account. But in remote manner, if the customer is using Aadhaar somewhere and account is getting opened by business correspondent and we are managing it, then such case only there is a balance restriction, 1 lakh. Operation restriction, not more than 2 lakh turnover in a year. Okay. And not more than 60,000 term loan. Okay. This is what is the video based. I think I have already told you, video based is as good as the physical presence, CDD, customer due diligence. Okay. CDD stands for customer due diligence, and customer due diligence is of 2 types: simple due diligence or basic due diligence, and second is enhanced due diligence. Basic due diligence is nothing but verification of document. Enhanced due diligence is something more than basic, is verification of the business activity and the understanding the business activity. Okay. Then BSBDA is any account. Okay. It is not a special account. It is a very normal account. Okay. The only thing is that a person can have only one BSBD. Once BSBDA is there. Okay. Then there is a maximum 4 withdrawal condition. No restrictions on the number of deposits, and KYC guidelines are as usual applicable. And why the BSBDA came? Because that time Pradhan Mantri Jan Dhan Yojana was not there. This was the only account recommended, that is no frill account. And once Pradhan Mantri Jan Dhan Yojana came, this account became back on the backstage and no more. But now BSBDS is there. That is a small account. As I told you, small account balance in the account cannot exceed more than 50,000. Monthly, not more than 10,000 withdrawal. And in a year, not more than 1 lakh rupee turnover can happen in the account. Okay. So these are the things I have already discussed, all these things. Now let us see minors account when we open. Minors
Sir,
accounts. Yeah.
What is that? Sir, what is the difference between basic savings bank deposit account and small accounts?
See, basic savings bank deposit account is with all KYC documents. Clear?
Yes, sir.
There is no concession in the document. Clear?
Yes, sir. Yes, sir.
Whereas small account, there is no officially valid document available in the hands of the customer. Clear? A customer such as, say, tribal. Now, can you expect them to have a passport? There are many people in this segment, they do not have a voter ID. These people don't have the Aadhaar card. These people don't have the driving license. Correct, no? Now,
Yes, sir. Yes.
how do they want to transact in case they want a transaction through because Government of India gave some subsidy for them. How to pass to them? The only way is open a small account. Open a small account. Okay. And that small account is nothing but BSBDS. Basic Savings Bank Deposit Small Account. Okay. Yes. Small account. And small account has got these restrictions because OVD is not there. But this person assures that they have applied for OVD. The account is renewed for a period of further 12 months. And after that, even after 24 months also, no OVD brought. Then I think we are under compulsion to stop the turnover in the account. Is it clear?
Yes, sir. Yes, sir. Now clear, sir. Now clear. Thank you.
Yeah. It's a very, actually, no, I can go further slow, further simplified way, but point is that there are many aspects and we have got only 12 hours to cover the syllabus, entire syllabus. And I'm not that type of hurry. Okay. I know that these are all things known to you. Now, minor. Who is a minor? Minor is a person who has not attained the age of majority. What is the age of majority? Age of
18 years.
majority is 18 years. Whereas the person is considered as a minor even even after reaching the age of 18 also, he is minor up to 21 years. Only in case where there is a guardian appointed by the court. Okay. And that too only under the Guardianship Act. As for Majority Act, he is regarded as major only once he achieves the age of 18. Okay. Now, secondly, bank is not supposed to contract with these minors because any contract with the minor is null and void right from the beginning. Now, when void contract, when unenforceable contract, why then we are opening an account? Because Reserve Bank of India says, let us teach them the importance of saving money. Let us teach them the value of money. And therefore, Reserve Bank of India said, once this young boy, young girl, they can read, they can write, and now they have achieved the age of 10 years and above, they can open an account which can be managed by themselves. Means they can write a withdrawal, they can pay in slip, they can come to the bank and transact. Clear? But no checkbook is given. But can we give the ATM? Yes, Reserve Bank of India says, if you explain the risk and then if you can manage the risk, then you issue the ATM card. We don't have it. Can we even give the internet banking? Reserve Bank of India says you can give only the viewing authority. What is that? Internet banking allow them to view the transaction, not to give them transaction ID. Okay. This is one. No saving, no overdraft in their accounts. Okay. No overdraft in their minors accounts. Clear? In case a person is less than 10 years old, less than 10 years, then the account will be opened in the name of minor, but operated by guardian. Operated by guardian. Clear? Any doubt, any question with regard to minor? Minor is a major problem. Okay. Now, next is a illiterate. Illiterate is a person who is unable to write, who is not having capacity to read, and therefore such person, when account is opened, his account opened or his transactions are carried out only when the person comes and affixes his thumb impression in the presence of bank officials, Now, which thumb? Left hand thumb impression or right hand thumb impression? Please understand, legal speaking, any thumb impression is fine, but as a matter of practice, left hand thumb impression for the male and right hand thumb impression for the female. Okay, that is what is the practice, and that practice even bankers follow. But as per law or as per any legality, no issue. Any thumb impression is a thumb impression. Okay. And in minors, in illiterate account, no checkbook facility. But can we give ATM? Yes, you can give ATM. Okay. Joint account. Please understand the joint account in the name of only close relative, father, son, husband, wife are generally opened, because minor do not know the intricacies of joint property or joint property with somebody else. So therefore, joint accounts are allowed only with very close relatives. Okay. Other than them, not to be allowed. Or technically, legally speaking, is there any bar? No bar. Okay. Then blind people. Can we open a saving bank account? You can open not only saving bank, you can open term deposit, you can open current account, you can give also the loan also. There is a loan facility also can be given. Okay. Now even
Sir.
yeah.
Can we open joint account for two different peoples, not relatives?
Yeah. Now you and me, both of us can open an account.
Okay, sir. Thank you.
Got the point?
Okay, sir.
So you and me, are we relative?
No, sir.
But if we have some kind of activity, we can definitely open a joint account. Okay, clear?
Clear, sir.
Now, blind person, competent to enter into contract. And RBI direction, this blind person can get ATM, blind person can get locker facility, blind person can also get the internet banking if he is ready to accept internet banking also. Okay. It is up to only the respective bank need to take a call whether to allow them to have the internet banking or not. Reserve Bank of India says no restrictions. Even it gives the direction that at least every 1/3 of ATM must be a Braille enabled ATMs. Whatever ATMs bank has got, that Braille keypad ATM should be there. How many? 1/3. 1/3. Even in the branches, directions must be there for them to reach the cash, reach the branch manager. Okay. Then handicapped people, incapacitated people. Okay. How to allow? Please understand, when both the hands are not there, what? Then any part of the body, toe also is possible. No issue at all. Okay. So just because a person is handicapped, it doesn't mean he is not in a position to enter into a contract. He can. Okay. And if somebody is incapacitated due to illness, or any other reason, due to he is signing a check or withdrawal, is not possible to come by visiting the bank personally, then in that case, he can put a thumb impression which is witnessed by 2 independent witnesses known to the bank, and of them one should be a bank official. Means, in case somebody who is sick and now he is not in a position to come to the bank, what a bank should do? Bank official can visit him, get the withdrawal, duly put his thumb impression or some impression on the check, and there must be another witness who should affix, yes, this thumb impression has been given by this person in front of me, and bank official also need to attest, and then with the help of that, his transactions can be put through. Is it clear? Is it clear? These are all case study related questions. Then Pardanashin woman. Many people misunderstand Pardanashin woman as a Muslim woman. That is the reason I just show you the photograph of these ladies. Do they appear to be Muslim ladies? No, no. They are not. Now, if they are not, then these kind of ladies are called as Pardanashin woman. Why they are called as Pardanashin woman? Because these ladies are not allowed to interact with the outside world other than their family members, and they are totally secluded. Secluded means they are totally secluded from the external world. As a result, what is happening external world, they do not know. And therefore, any contract entered with such women is not free from defect, because she can make a contract voidable It is a voidable contract. She can make a contract void on her declaration. And therefore, while opening a bank account in her name, the issue of identity comes. And therefore, identity of a Pradhanashin woman need to be verified only and only by a lady official, because they will never open their face in front of stranger, Is it clear? Now, next you see the photograph. Photograph of these ladies is compulsory. Okay. Now, how do they get photograph is a secondary thing, but they have to definitely give the photograph. In case the photograph they do not have, then our officer will try to capture the photograph on the mobile. And which officer? Naturally, a lady officer has to go. Clear? Then next is the rate of interest. What is the time? Yeah, by the way, yeah, we will stop for a while. It is 8:37. Okay, we'll stop for a while, 8-10 minutes. And I think what you can do, you can come back exactly at 8:45, then up to 9:45, we can carry. Okay, bye. We have stopped suddenly. I think it's also a shock to you. Well, I was thinking that definitely time might have gone beyond the limit. Okay, and whatever way you, in case you get in between any doubt questions, you are welcome to raise, but have a break of 7-8 minutes. Bye. Yes, I'm breaking now. Whosoever is there from IBS, make a note, please. Hello, IBS, who is there? Hello, it is a break time now. Now it is already 8:37. So what I can do now, 8:40, so 8:50. Up to 8:50. Arey, Syed Hafizuddin is not in the meeting. Why? Okay. Hello, friend. Those who are back, they can ask me any question, any doubt. I'm here to clarify. I think 2-3 minutes are there. I think you are most welcome to raise any queries. Hello? Any doubts? Okay, if you do not have any doubts, then I think I can move with something else. Okay. Now that we have lecture with some elements relating to the CASA, after talking about the details of various aspects of KYC and the other elements, now let us come back to talk about the interest on the current account. Can we pay the interest on current account? Basically, the current account balances are do not attract any interest. Means on current account, generally we don't pay any interest. But there is one situation. There is one situation where we may have to pay interest on current account balances, where in case the current account is maintained by a proprietary firm means a firm who is carrying business and the business owner is a proprietor. In case the proprietor dies and the current account is for the business, that current account is there. In this current account, there is a balance. If the proprietor dies, his son is likely to claim the money. Okay, and in case that son claims the money, that from the date of death to the date of the claim, that is a payment made to the person, up to this particular period of time, we are supposed to pay interest at the rate of savings bank account for the period. Is it clear? This is the only situation where we are supposed to pay interest on current account balance. Second, with regard to savings bank account, who decides the rate of interest on saving bank account? Saving bank account rate of interest are decided by respective bank, because from 25th October 2011 onwards, the savings bank account interest rates are deregulated and respective bank is given permission to charge the rate of interest, permission to give the rate of interest on the saving bank balances. Now, at the same time, Reserve Bank of India put 2-3 conditions. What that condition? The condition put was there cannot be discrimination between the customers except for the balances maintained beyond 1 lakh rupee. Means there are two customers A and B, and between two A and B, there cannot be different rate of interest. Okay, for A one rate, for B another rate. Only when rate of interest can be different based on the balance maintained by A or balance maintained by B. Now, that also bank need to have their policy to offer that rate of interest, change rate of interest. And accordingly, many banks such as IDFC First Bank, Kotak Mahindra Bank, or for that matter, the many public sector banks, they have come out with a additional rate of interest on saving bank for the people who are maintaining balance more than 1 lakh rupee. Number three is this interest on saving bank account has to be paid at least once in a quarter. At least once in a quarter. Many banks have now started paying the interest on monthly basis. Okay, this is the way the guidelines are there with regard to savings bank account interest. And interest on saving bank account need to be calculated on daily product basis. On daily product basis. What is mean by daily product basis? That whatever number of days the customer is maintaining the balance, for those number of days you need to calculate the rate of interest per annum basis divided by the 365 multiplied by number of days that balance maintained. Such a way when we pay the interest, then it is known as daily product basis. Any question, any doubt? Any question, any doubt on saving bank interest?
No, sir.
Good. Now, there are some banks which are offering on the basis of monthly average balance multiple features in a saving bank account, multifaceted saving facilities, other additional benefits. Like that, some banks are offering the products to attract the clients. Okay. Now, as far as time deposit concerned, I think all of you are aware about minimum 7 days, maximum 120 months, and any amount that any account term deposit. If we are paying more than 20,000, it has to be paid through account pay check only, or otherwise it needs to be credited in the account. Okay. Then next is any time if the due date happens to be a Sunday or the Saturday on which bank is happen to close holiday, then in case we are immediate next day, if the customer is coming, for these 2 days also, bank supposed to calculate interest at the contracted rate and pay. Okay, then the TDS need to be calculated by the bank in case the interest on the deposit account per annum, if payment exceeds rupees 50,000 for senior citizen and 40,000 for any other person. In a year, interest payment is more than 40,000 or 50,000. Okay, then the TDS guidelines applies, and we are supposed to charge TDS at the rate of 10%. Okay, where only in accounts where PAN card is provided. Other accounts, TDS is 20%. And with regard to NRO account, non-resident ordinary account, it comes up to 30%. It comes up to 30%. So these are the TDS guidelines. Okay. Then some banks are offering now the variable rate of interest, means as and when Reserve Bank of India changes guidelines with regard to repo, but then accordingly even deposit rates also automatically rate of interest changing. Such kind of deposits are known as floating rate term deposit. Means rate of interest is not fixed for the entire tenure. This rate of interest changes as and when there is a change in the some rate on the basis of which we are offering the rate, and that generally banks are considering as a repo as a basis. Okay, so that is how the floating term deposits, floating rate term deposits. And then bank can offer loan against bank's own term deposits only, not on other banks' term deposit. Okay, and loan can be given up to 80 to 90%. Loan can be given up to 80 to 90%, whereas Reserve Bank of India permits it. Even if it is allowed by your bank's loan policy, you can allow up to 100% also. But normally banks thinks that at least that 10% must be kept as a margin, because rate of interest we charge, and due to excess over the deposit value, an account is likely to be considered as NPA. Therefore, bank normally sanctions 80% only. In exceptional cases, 90%. Okay. Other banks' term deposits strictly prohibited. Okay. Then with regard to term deposit, it is overdue. Means after due date also customer is not collecting the deposit. Many banks have got a auto renewal facility. Automatically the deposit gets renewed for a further period. But some customers say, I don't want any auto renewal. And such accounts, they become overdue. And if an account becomes overdue, then for the overdue period, the rate of interest to be given, that is interest to be given to the customer at the savings rate, or otherwise contracted rate of interest, whichever is low, okay. Then the person says that don't collect the TDS on my deposit. Okay, when you can accept the 15G, 15H, when his total income from all the sources is not more than the taxable income. In such scenario, the customer can give 15G or 15H. 15G for normal customer, 15H for senior citizens. Okay, and this form can be accepted by the bank and TDS can be avoided. Okay, so and any TDS done, tax collected by you, then as a banker, you have to remit by 7th of the next month, only except the April month where you can deposit till 30th April, not in the not by 7th March. Okay, 7th April. You can deposit up to 30th April. That is the only March rate, March TDS only. You have an additional period. Okay. Then there is a facility. Many banks are offering that facility is known as flexi deposit, hybrid deposit. The deposit which gives the facility of liquidity of saving bank current account and the rate of interest returns with regard to fixed deposit. Such a facility is provided in one account, and such accounts are flexi deposits, wherein what happens? No, customer maintains a balance more than, for example, Union Bank of India in saving bank account, any balance maintained more than 50,000 rupees. For example, I have got an account. In my account, the balance becomes now, due to pension credit, 79,000. Now, once the balance becomes 79,000, system calculates that there is a 29,000 more than 50,000 available. This entire 29,000 gets converted into fixed deposit. Okay. And then in case if I issue a check, then the last in, first out, that is the principle applied, and that deposit amount comes back and it comes into the account. That's the way sweep in, sweep out. This facility is made available in flexi deposit. And as all of you know, what is an inoperative account? Any account where no operations for a period of 2 years. That is inoperative account. And that too customer induced transaction. Means no operation means no transaction means customer based transaction, customer carried transactions. If they are not there, then that account is called as an inoperative account. And such inoperativeness, if it is continued for 10 years, then account is called as a unclaimed deposit, and that unclaimed deposit is transferred to Reserve Bank of India, and under the Reserve Bank of India maintains under DEF. Now Reserve Bank of India has started this year onwards, that is 1st July 23 onwards, a campaign of 100 days, 100 pays. And they have also opened a Udgam portal, and from that even people can find out the deposits in the name of their kiths and kins who have died. So they can find out the deposit and they can now claim. And even bankers are directed that in coming 100 days, 100 pays have to happen. Okay, that is what are the guidelines. Secondly, on the balances which are transferred to DEF, the rate of interest is paid by Reserve Bank of India at the 3% per annum now. Earlier it was 4, then it was reduced to 3.5. Now it is 3. Okay, these are the few things I think you must know as far as deposit part concerned. And in addition to this nomination facility is a very, very important facility on account. And this nomination in an account safeguards the customer from hardships to their legal heirs or to their kiths and kins from getting the money from the bank. It reduces the hardship to the bank also, going through the legal formalities, identifying the legal heirs and all those things. Bank also can avoid. Therefore, nomination is beneficial for both the people, and nomination is introduced in the country under section 45ZA to ZF of Banking Regulation Act, as well as Banking Companies Nomination Rules 1985. So nomination is available in safe custody, safe deposit locker, bank deposits. Nomination is available in the accounts of only individuals and joint individuals. Can the nomination be cancelled, modified? Yes, entire tenure, any number of times nomination can be cancelled, nomination can be modified. Who can be the nominee? Nominee again should be invariably an individual only. Can there be more than one nominee? With regard to deposit, no scope for more than one nominee. With regard to safe custody, no scope for more than one nominee. But with regard to safe deposit locker operated jointly, there is a possibility of more than one nominee with the consent of all other locker holders. Okay, and that too restricted to 2 only. Okay, what is the legal status of the nominee? Nominee is entitled to. Can nomination done for current account? Yes, current account in the name of proprietor, current account in the name of individual. Clear? Current account in the name of proprietor, current account in the name of individual. Okay, a current nomination can be there. Okay, and who can be the nominee? Nominee also should be the individual only. Nominee cannot be the trust. Nominee cannot be the company. Okay, then legal status of the nominee. Who is powerful, whether legal heir or nominee? As far as bank deposit concern or handing over security is concerned, as far as bank, whosoever is the nominee, whom we are going to hand it over. But at the same time, let us try understanding the concept. Nominee is the person only to receive money from the bank or articles from the bank, but he will not be becoming the owner of that property. Owner of the property continue to be the legal heirs of the deceased person. Okay. Joint account, can the nomination be there? Yes, with the consent of all, there can be nomination. As I told you, even in the joint account also, there can be only one nominee, except the locker, where locker also jointly operated locker. In that case only, the two nominees possible. Can the person other than the blood relation? Absolutely, because nomination guidelines never say that nominee should be blood relative. There is a column relative, and there is a common relationship column. Under the relationship column, the person can write a friend, because friendship is also a relationship. Okay, there is no bar. Is it clear, dear? Now, any balances which are left over in the account, whom will be paying? Naturally, the bank will get a valid discharge in case the money is claimed with the identity of the survivor or the nominee, with a proof that the person is died, and there is no court stopping us to make payment. Then bank gets valid discharge on making the payment. Okay, this is what is. And within 15 days of making the death claim, within 15 days of the making claim, we are bound to make the payment to the person who is claiming the balance. Okay, now let us come back to the theoretical concept. That's the reason I have mixed it. Okay, instead of going on the only theory part like this, I have just included the practical operational part, and I'm coming back to how the product gets developed. Okay, even for that matter, banking product also. First of all, an idea is generated about the product. That is a new product idea comes, and this idea gets screened whether this workable or not workable. Then this concept is tested, discussed with multiple groups whether this product can work or not. Then business analysis and market analysis of that product is carried out, and after that only actual product development process starts. In a physical product segment, the prototype is developed and the prototype is put to use, and after the prototype starts working, then only the actual product commercial production starts. Okay, even for the service products like banking also, more or less similar process only. Except for this business analysis and market analysis, only the surveys are done and testing is done actually in a select areas. And once it is tested, checked, workable, then the product is launched across the territories. Okay, this is how it happens. And in the product development, what are the problems? The problem is in banking, actually our customer base is very heterogeneous, very difficult, very typical people. In one area, one type of people, another area, another type of people, one area, one kind of demand, another area, another kind of demand. So all that, because see, Gujaratis think in an altogether different way than these South Indian people. Okay, more focus is on deposits in one area, whereas more focus on availing the loan in another area. So like that, multiple heterogeneous customer base, technology disruption, and already there are many products. Existing product range is so big. Okay, which product is really to bring is a challenge. Okay, and ideation stage looks attractive, but actually commercially it may not be workable. So, and most importantly, whenever a new product is brought by the product development team, mostly bank employees, I think they resist. They say, why are unnecessary headache? Oh, has so product come hai kya problem tha, vagara vagara. But one thing, please understand, by bringing new products only, we can attract some segment of the people. And this is the common psychology of the people, that they want some innovation, some change. And with that change, we can go on revisiting the market repeatedly. To make our presence in the market repeatedly, we have to bring something new. Okay. Now you can see here very interestingly how a new product comes. See, to understand that, let us understand the product evolution. See how the product is. For example, the basic product is a core product. For example, I'm telling you the example relating to, let us say you want to go to, you are in a new place, and now and you are landed in that place at night 10 o'clock. Now you need to take a rest, and for that purpose you want a room. Now you are looking for what now? Tell me. You are looking for a place where you can rest. Am I right? Now, basic need of yours is a bed. Am I right? Basic need of your need is your bed, and that bed may be sharing dormitory, or that bed may be a room. But since you are a banker, you may prefer to be in a room. Now you go to a place and you ask him, room is available? He may say yes. Now you went into the room. I think that is what your basic thing is. Bed is available. Then what do you expect? Tell me. You expect already a bed should be neat. There must be linen properly. Clothes are clean. That is the minimum basic expectations are there from the product that is known as core product. Then, in addition to this, now, don't you expect the attached bathroom? Don't you expect that in the bathroom there should be a mirror? You expect, am I right? Now that is how the generic product, it becomes the generic, because these are all the automatically they comes, and you now start expecting a towel inside the room. Now that is what is the expected product. Now you want a towel, am I right? You want a towel. You also want now hand wash. Now you also want now soap. You also want now that is the way. This because your expectations now. Now this beyond that now there is an augmented product. What is that? All these things are okay, but in order to beat the competitor, you are offering something more, and that kind of thing is known as augmented product. Means now see these kind of things, whatever I have told, towel, your face wash, or your hand wash, or your soap, or your shampoo, every hotel is providing. What is new in that? So something which is beating competitor, some kind of thing such as Wi-Fi free, okay, Wi-Fi free, or such as the morning newspaper complimentary, breakfast and dinner complimentary, like that thing is the augmented product. Now beyond that also can be there, that in case you are staying for more than 3 days, suddenly you see on your table the a fruit box. That is the way you can make the customer say, wow, good, great. And that is the way potentials are available in the product. So these are the 5 levels of the product evolution, and they are given by the Philip Kotler, who is a management guru. Okay, and in order to have a product, bank or organization, any organization, it need to have a policy. Who is going to appraise the product line? Which products are suitable and which can be added? Then how the product need to be differentiated? And what is the policy for positioning a product? What about the brand? Who is going to establish the brand? Are we going to have a union with name Union Bank people, Syndicate Bank people? What is the branding? The style of branding? All those things are there as a part of product management. Okay, and product differentiation is nothing but customer need to appreciate that X bank offers the same thing, but there these kind of differentiations are there. Please understand, in the banking, most of the bank offer the same product in the same manner. The only thing which difference made is the way in which the product is offered by the people, the way in which the people interact. And that is the reason in the service industry, people, process, and the physical evidence. These are the 3 P's of marketing. They make the total differentiating factor. Whereas with regard to product company, there may be differentiation on the basis of price, there may be differentiation on the channels, there may be differentiation on the basis of the promotion, but otherwise the differentiation in the service industry happens on this people, process, and the physical evidence. Okay. Branding, I think all of you know, brand plays a very vital role, and many people today's generation, they are looking for brand, because brand gives an identity. Brand automatically indicates the attributes, means qualities of the product. Brand can provide you the strategy for the putting yourself in the market. It helps you in marketing. It helps you in communicating in a very simple way. So these are all the advantages of branding. Yeah. Which one of the following statement is appropriate? Customers are different. Needs of the customers are different. Each customer will have a different set of needs for financial service. All are there. Okay, all are correct. And every statement is a significant different statement. Okay. Which one of the following statement is correct in respect of product cycle? In introduction stage of the product, the sales volume is low. The revenue from the product will not be sufficient to cover. In a growth stage, second stage in the product life cycle, sale volume remains stagnant. In the maturity stage, there is a more growth and sales volume peaks. Please understand, see what is given here. In the growth stage, second stage, product life cycle, the sales volume remains stagnant. Is it true? It is not true, because in the growth stage only sales are growing like this. It is not the stagnant. Where is the stagnancy reaches? In the maturity stage. In the maturity stage. Clear? So that is the way one need to appreciate the question. Okay, good. Now, answer is already there. Product architecture component include generic product, core product, expected product, additional features, augmented product, value addition, potential product, futuristic features. Okay. Okay, I think these answers are already there. Leave it then. Okay. I think I forgot to animate. Which one of the following product is not a retail asset product? The term deposits is not a retail asset product. It is a retail liability product. And consequent to deregulation of interest rate in saving bank account, a bank can pay. Okay. I'm sharing this. I think you need not have to worry. Okay. I have shared already. Banks pay interest on the balances in saving account, but no interest is being paid in current deposit. However, the requirement of minimum balance situated now here is income tax rule. A term deposit FD may be paid in cash if the amount of maturity proceed is less than 20,000. Then reverse sweep facility 2-in-1 account applicable for on the last in first out basis. What is last in first out? Did you understand? Hello? What is last in first out? So anybody has got doubt, or every one of you understood what exactly that it works? So when in case of this, see, balance basis, no. See, when my account, let us say I told you 50,000, any minimum balance and any over and above that, it goes to fixed deposit. Now, when I issue a check, then the last went money only will come back. If because my earlier money is already attracting interest, higher interest, am I right? That interest continue to get on that, so that there will be least impact on the customer. That is the logic behind. That is the logic behind. Okay. The rate of interest in case of recurring deposit for a particular period is the same as FD because it is considered as FD. Now, very significant part we are starting, that is a loan related part. Okay. Now, as you know, loans are how many type of retail loans we are talking now? Which are all the retail loans? Can you list here? Tell me one by one, which are all the retail loans? Housing loan, am I right? Then the mortgage loan, then the car loan, then the consumer loan, isn't it? And then the last but not least is the credit card. Now, these are all the credit related lending products for retail basis. Now, these are the retail products. How a bank sanctions these products to the people, how the loan is sanctioned, what is the basis for sanctioning? The basis for sanctioning always in a retail loan is the income criteria of the person. Am I right? Existing income level of the person, because bank wants to ascertain repaying ability. Am I right? Repaying ability. Now, next important factor which bank looks into is what is the intention of the person. See, mere ability is not the factor. Another factor is intention. That is also equally important, no? And that intention part to judge, very difficult, because every borrower at the time of taking loan, he says he is the only best borrower in the world. Okay, he is the most honest person. He is the person who fulfills the commitment. That is the way person tells. And therefore, many bankers earlier felt the need for a database relating to those borrowers in a very structured manner and providing that data to the bankers to take the decision while giving the loan, because this repaying ability can be ascertained from the salary proof, income tax proof, bank account statement. Okay, these are all the sources through which I can ascertain what is the income level. But his way of dealing with the loan can be understood only on the basis of report given by somebody, and those reports are provided to us by the credit information companies. Who provides it? Credit information companies. Which are all the credit information companies working in India? In India, as on today, there are four credit information companies. One is a CIBIL, that is TransUnion, CIBIL TransUnion. Second one is Equifax. Third one is Experian. Fourth one is Crifimark. Fourth one is Crifimark. These are the four. Now, this all the CICs in India, most important is CIBIL is the first CIC. CIBIL is the first credit information company established in 2000. And thereafter, CIBIL in that Credit Information Companies Act was passed in 2005, and Reserve Bank of India started regulating it. Now, as all of you know, there are two types of reports. One is a consumer individual report and commercial credit report. Like that, two reports are there. Okay, and the bank can obtain the report on the consumer as an individual. Okay, consumer as an individual. And also there is a CIBIL MSME fit rank is there. Okay, MSME fit rank is there. Okay, for the MSME credit. Now this score is 300 to 900. Generally, score of 700 plus is considered as satisfactory. Generally, score of 700 plus is considered as satisfactory. Okay. Now, this whatever report is given is a credit history. It is a credit history. It is in the past what happened, that only given to all of us. Okay. As I told you, these are the four companies, and these companies, now every bank need to provide data to all the four companies. And there are also guidelines that every year these companies have to provide a free full credit report once in a year, free of cost to the people whosoever is demanding from them. Okay, once in a year, free report. And that too, it is given on email. It is given on email, not in a physical form. Okay, these are the few things about the these things. Okay, I think this is what you need to know. Now, few questions we will see. With the help of that, you will get the clarity. Credit scoring models are based on dash of applicant, defaults on previous credit transaction, payment behavior and payment history, previous searches and enquiries, and annual income.
Sir, first, sir, one only. Defaults in previous credit transactions.
1, 2, 3.
Yeah.
D,
Because
option D.
except annual income, all are taken into account to derive whether 750 or 600 or 500. All the factors are taken into account. For example, even a person, these two things are positive. But recently, if the person is inquiring more than one bank, okay, when he inquires with more than one bank, the score of the person comes down. Why? Why? Because it indicates the credit hungriness of the person. The person is trying to look for more credit beyond his capacity. That's the way the model understands, and accordingly his score comes down. All these things, previous defaults are also taken into account. How his behavior was with regard to payment history, okay, then as well as the searches, enquiries. Okay, clear? Now, most common mistake in credit score by the companies. Which are all the common mistakes? Common mistakes are confusion of names. Naturally, data is fed by the people, so human input error, and the identity theft. What is meant by identity theft? Identity theft is someone's data for somebody. Okay, that is because, see, data is linked to something else based on that. Because when CIBIL started, that time Aadhaar was not there. When the CIBIL started, many people were not having the PAN card also. Okay, PAN was also not there, and the data built, but the data clarity is even yet to happen. Okay, even now data is not so clear. Therefore, all these errors are part of it. Then, which one of the following is not a credit information company approved by RBI? Very good, very good.
CRISIL, sir,
Definitely
CRISIL.
CRISIL. What is CRISIL? CRISIL is a credit rating agency. What is CRISIL? CRISIL is a credit rating agency. Okay. Now, please understand, credit information companies are registered and regulated by RBI. Whereas all the credit rating agencies are registered with SEBI. Okay, registered and regulated by SEBI. Which one of the following parameters the credit information companies normally give higher weightage? Payment history. Now I think your question,
Which one of the following parameters?
which is the highest weightage given is a payment history. Okay. Now, here is another important factor we need to look into, because we commonly talk it as a margin. Okay. Any loan, let it be a housing loan, let it be a mortgage loan, let it be a loan against jewelry, let it be any loan. What we expect whenever we give any loan, we don't give the 100% value of the asset as a loan. Correct? No? Whether it is a education, whether it is a personal loan, whether it is a car loan, whether it is a mortgage loan, housing loan, or business loan, we don't give normally 100%. Then how much should be given and what is that? Generally accepted rule is at least 75% maximum can be given and 25% minimum can be by the borrower. That is the way 100% value of the asset. Now, the same factor Reserve Bank of India wanted to give it in a different manner, and it calls it as the LTV. What it calls? LTV, loan to value ratio. Now, what is that loan to value ratio? Based on the LTV prescribed by the Reserve Bank of India, the Reserve Bank of India says, in order to follow the LTV principle given by me, when you follow it, then you are allowed to apply the appropriate risk weight for your capital. Otherwise, you may have to give the higher capital. And therefore, Reserve Bank of India guidelines mostly they are applicable for resident individuals. Okay. And you see here, the plain vanilla products are for resident individuals, whereas special products are for high net worth individuals. Now, just very simple thing. High net worth individuals, they don't bother about your housing loan. Okay. They don't bother. They are least bothered about your housing loan. Okay. Therefore, they definitely expect something else. Okay. Now, for a mortgage loan, what is the margin? 20% margin. As a result, what happens? LTV becomes 80%. Loan to value. Okay. LTV for jewel loans, generally 75% of the jewelry value. But some banks are offering at 80%. And Reserve Bank of India, it's 80% in Union Bank of India. On one of the product, Union Bank of India is accepting the jewels. Okay, they are giving 80%. But actually, Reserve Bank of India says don't give less than 75% LTV, means minimum 25% margin you hold. Okay, whereas same RBI says for non-farm activities, means other than the farming activity, LTV can go up to 90% of the jewel loan. Okay, can go. Okay, that is what RBI says. Housing loan, it gives a specific format. Read it very carefully. Exam point of view, very, very important. Very, very important screen. Okay, LTV ratio is 80% or less than 80%. Then automatically your risk weight is only 35%. Whereas once the 80% crossed between 90%, then the LTV in risk weight is applicable 50%. Now, what happens if the LTV becomes more than 90%? More than 90% LTV you can give, but once you give, this risk weight automatically becomes 100%. It is up to the respective bank to take a call. And that too, these loans are up to 30 lakhs. For above 30 lakhs, up to 75 lakhs, it is 80% only. Okay, 80% or less than 80%. And risk weight is 35%. And above 75 lakhs, 75%. And risk weight is 50. Risk weight is 50. And in addition to this, during this your COVID period, during the COVID period, Reserve Bank of India changed the LTV criteria between October 16, 2020 to 31st March 2022. So as a result, now it is not applicable. Why to break the head? Okay, unnecessarily, we should not read such thing and get confused. Okay. Now, bank financing is given for housing. Now, can we give the loan for purchase of plot? So, loan for the purchase of plot is given within the housing project part, not only to buy the plot. We rarely give loan for plot as a part of construction of house only is considered. And that too, the loan repayment, that loan moratorium, all those guidelines that Reserve Bank of India says bank need to decide about their loan policy and accordingly they can consider. But only for buying the plot. Loan cannot be given by bank. Can a loan be given for repairs? Definitely loan can be given for repairs or renovations. Definitely can be given. Okay. Can a loan be given for second house? Definitely to buy a second house, to construct a second floor, the loan can be sanctioned. Can alterations, additions, repairs fully financed by them can also be given. Moratorium, generally moratorium is a period during which bank do not insist for any repayment. Okay. Such a period is normally ranging from 18 months to 24 months, 18 to 24 months. But nowadays, the high-end projects or multi-storied projects, they are taking even up to period of 36 months. And after RERA started operational, RERA is Real Estate Regulating Authority started working. Even the guidelines are changed, and accordingly 3 years period also is being given by some of the banks. Okay. Now, under the housing loan criteria, which loans are considered as priority sector? Can anyone tell? Can anyone type out here? Which loans are treated as priority sector?
Agriculture, MSME,
No, housing loan I am asking.
Housing loan.
Which housing loans are priority sector?
Which housing loans are
Below 35 lakhs dwelling cost, sir. In metro, below 35 lakhs loan.
So in a metro cities, less than 35 lakhs with a house value less than 45 lakhs.
Dwelling cost.
Dwelling cost, that is house value, is less than 45,000. Then only it is a priority sector. Whereas in a non-metro centers, dwelling cost is 30 lakhs and loan value is not more than 25 lakhs. Then only it is a priority sector. Okay. 6 lakhs and 10 lakhs. Okay. The repairs. Okay. So that is for the repairs also be considered as a priority sector. I think then union, that is Government of India, Pradhan Mantri Awas Yojana. Pradhan Mantri Awas Yojana, is the time is there or time is up?
Time is there. Another 10 minutes left.
Very good. Then Pradhan Mantri Awas Yojana. Pradhan Mantri Awas Yojana is a scheme launched by government on 150th birth anniversary year of Mahatma Gandhi. And the objective behind it was that by March 24, the government will be able to give the facility for 20 million houses. Okay. And it is a credit link subsidy scheme, particularly for the middle income group people. And the middle income group people, this scheme is to provide any loan under the CL credit link subsidy scheme, 20 years tenor. Okay. And there are two schemes, PMAY Urban, PMAY Gramin. Okay. And in a simple sense to understand, the people who have got up to a income, okay, up to a particular range, income criteria, then they are considered as economically weaker section or a LIG or MIG or MIGB. And accordingly, up to 3 lakhs are economically weaker. 3 lakh to 6 lakhs, LIG. 6 lakhs to 12 lakhs are MIG 1.
Middle income group.
12 lakhs to 18 lakhs, MIG 2.
MIG 2, MIG 1,
And
MIG 2.
accordingly, the subsidy ranges. So interest subsidy is 6.5%, and here only 4% and 3%. Okay, means whatever interest charge, the 3% of that particular loans interest is being subsidized by Government of India. And that too, the maximum loan amount eligible for subsidy is 5 lakhs, 6 lakhs, 9 lakhs, and 12 lakhs. Okay. And for that also, again, there is another criteria, kind of house. For economically weaker, 30 square meter. And LIG, 60 square meter. 60 square meter. And for MIG, 120 square meter. 120 square meter is almost 120 multiplied by, you can say the 10 almost, means 1200 SFT house. Okay, MIG2 is 150 square. So like this, it works area. Okay, so this is what is the Pradhan Mantri Awas Yojana scheme in a nutshell. Okay, then affordable housing scheme is there. Okay, and affordable housing scheme is nothing but the financial assistance to the tune of 1.5 lakhs from the central government for economically weaker section families to have their house. Okay, and this loan is provided by the government from their funding source. It is not the bank loan. Okay, but the agencies which are providing it for them, the bank can also help. Okay, individual house construction enhancement led by the beneficiaries, that is also possible under this economically weaker section people. Education loan also a priority sector. Up to education loan sanctioned up to 20 lakhs is a priority sector advance. And within that, there is a scheme. There was a scheme, I can say, rather than there is a scheme. There was a scheme called Padho Pradesh. It's now no more. Okay, Padho Pradesh is gone. Similarly, there was an interest subsidy scheme under the Baba Saheb Ambedkar scheme for the OBC people. That also gone. So now you have to consider only the scheme which is floated by IBA, and that under that scheme up to 4 lakhs, no margin. Above 4 lakhs, it is 5% to 15%. Okay. Now above 7.5 lakhs, it is up to the discretion of the bank how much margin can be. Okay. Now similarly, there is a collateral security condition also. Up to 4 lakh collateral security nil, and more than 4 lakhs up to 7.5 lakhs, it's only the third party guarantee, and more than 7.5 lakhs, only the bank can insist on the collateral security. This is the scheme. Okay. So I think under this, there is a moratorium of 1 year after completion of study up to the employment, whichever is earlier. So these are the few features. I think this I have already told you, that loan sanctioned up to 20 lakhs only is considered as priority sector. Okay. So I'll stop at this juncture, or shall we go with few questions and then we'll stop? Okay. Home loans are sanctioned by the bank for following purpose such as. Answer is already there. Again, answer is there. I think there is no fun. Auto loans are given by banks for the following purposes such as purchase of new car, purchase of used car, purchase of two-wheeler, purchase of all the above. Personal loans are sanctioned by banks on salary in case of employee, monthly annual income in case of business person, and number of years of service or in business. Okay, all the three factors are important while considering the personal loans. Retail loan processing center. Retail loan processing centers, I think yesterday we were talking about retail loan processing centers of the banks are designed to what? Designed to what purpose? Designed to all sourcing the asset, processing the retail asset, doing the valuation, obtaining valuation or legal opinion, and release the loan either at their end or advise the sanction to branches. Okay. So with this, we will stop, and remaining part we will try to cover in the next session. I think we have gone a bit slow, but I think this is the justifiable way. Beyond this speed, if I do, there will be nobody will be able to understand. Now, all the remaining 4 minutes, I'll just give it to you for any sort of doubt you have got with regard to either the retail deposit product or retail loan product or any other aspect relating to marketing, because tomorrow we are likely to begin with that element of the retail banking part, so that we can have a one last day for MCQ based interaction only. Okay, because most of you wanting that, therefore I thought one day we will have only MCQ based interaction. Yeah. Any questions? Yeah.
Sir, one question, sir.
Yeah.
That The TransUnion, Sibyl, Equifax, Experian, Criff
Highmark.
These four are credit information companies. Another CRISIL is credit rating agency. What is the difference, sir? Credit rating agency
Very
and
good,
credit
good question,
information companies.
good question. See, credit rating agencies are the rating agencies about the company they rate. About what they rate? About company they rate. And what do they rate? The company's financial position, company's business outlook, company's way of doing the business activity. Based on all these parameters, the score or you can say the ranking is provided or rating is given. And this rating enables the people who are investing in the money. Bank also gives loan. Bank loan is nothing but bank investment in the company's requirement. Am I right? In the similar manner, even outsider people, for example, people may invest in the debenture, people may invest in the shares. Okay, at that time, rating only enables the people to understand the company because balance sheet analysis, understanding their ratios, understanding their business pattern, all this is very difficult. Simple one rating is given AA plus means excellent company. That is the way I can understand. Is it clear?
Yes,
So
sir,
it is about the company and the businesses, whereas credit information company is more about the individuals and the very MSME CIBIL is for the MSMEs on that too on a very limited criteria called finance, income, and the trade. Only on these three factors based, the credit history looked into and the ranking is provided. And that ranking is known as CIBIL MSME Fit Rank. Okay. Even MSME also, this CIBIL also provides the rank, but that is only limited to CIBIL. Okay. CIBIL provides only CIBIL Fit Rank for MSMEs. Clear? Rating agencies are 6. Okay. Rating agencies are 6 approved by Reserve Bank of India. There are 7 registered and permitted by SEBI. Only one Brickwork Rating, whose license was cancelled by SEBI, but again it was restored. Reserve Bank of India removed them the list of approved rating agencies, and rating is compulsory for advances more than 5 crore. Rating is compulsory. External credit rating is compulsory for advances more than 5 crore. And in some of the banks, the criteria of external rating is a little bit relaxed because their internal rating is strong, such as Union Bank of India. They ask external credit rating compulsory for 25 crore and above advances. But Reserve Bank of India, as per the risk management guidelines, they say that in case you do not have any internal rating robustness, then you must go for the external rating agency for any advance more than 5 crore. Okay, I think that is enough for credit rating agency. Okay, so any questions, any doubts, anybody? Please tell in brief about the collection account. Very simple. See what happens. No, I do the business. Now, while doing the business, everywhere I cannot be there. Am I right? So my company is there, my manufacturing account is there. Now what I do, I am supplying my goods from Hyderabad to Nizamabad. Okay. Now in Nizamabad, let us say the bank with which I am operating here in Hyderabad may not have a branch there. And in that case, what happens now? My branch which is operating in Nizamabad, it is selling the goods. Am I right or wrong? It is selling the goods. When it sells the goods, there are receivables. Now, when there are receivables, those receivables are collected by my agent there. Now, where he has to deposit? He has to invariably deposit in a bank account there in XYZ place in Nizamabad. Agreed? Now, that account is called as a collection account. Is it clear? Now, that collection account, whatever money is collected, within 2 days, that bank is under obligation to remit me in case if I am having here any borrowal facility or loan facility from other banks from where I am availing more than 5 crore loan. Otherwise, if I have no loan here, then whatever number of days I want, I can ask them to retain. Is it clear? Yes, R.K. Sridhar Garu. Is it clear? Any other question, please? Okay, in case you do not have any more questions, then I think instead of just sitting idly and people are withdrawing, I think I'll say good night to you all. Have a wonderful time and hope today's session you had enjoyed very, very excellently, and I hope it was a value addition to you all. Okay, good luck to you, and we'll come back tomorrow. Okay, and then remaining aspects will complete. Remaining aspect, and now we are comfortable, don't worry, very, very coolly we can complete the part, since now theoretical parts are there and partial theory we have already completed. Okay, good night, and I'll be very happy to have your feedback on the respective group wherever you are attending the different classes. Thank you, Daniel. I'm really happy. Good luck to you all. Good night.